Hello, everyone. Welcome to this panel about funding India's future. Joining me today is Salone Sehgal, who's the founder and general partner for Lumikai Fund, and Bhawna Bhatnagar, co-founder for the WeFounder Circle. Um, it's exciting to be in Doha. So let me first start with an overarching question for both of you. With 17 billion raised last year, do you see that the current market conditions in India are sustainable in 2025, or are there signs of a potential slowdown? Saloni.
I think when you look at just macro trends for the India market, right? India is currently the fastest growing market in the world, right? In terms of if you just look at GDP growth rates, we're the fourth largest market in terms of market cap. We have the third largest startup ecosystem in the world. But I think more interestingly, there are a couple of things that have happened which have really created this inflection point for the India market, right? We have seen the India market become more formalized, which has meant that we have now seen tax collections rise. We have seen now this boom in the stock market. And also, most importantly, what has happened, the biggest tailwind, I think, in the India market has been the India digital tech stack, right? Whether it's been the likes of a UPI, which is the payment infrastructure, or whether it's been Aadhaar, which is the identity, um, or whether it's been ONDC, all of these have helped unlock new business models for the country, which I think is actually where we see the tipping point. So I don't believe growth to slow. In fact, I think because of these factors, we will actually see a lot more innovation come out from the India market, particularly when it comes to early stage tech startup. And there's a lot of regulatory support. India's just announced a $1 billion fund of fund. You've got a lot of regulatory support for promoting AI or technology. So I think it's that right tipping point where the market is actually going to grow rather than saying, hey, there's a slowdown. I think we've come through 2 years of it, but there's a very clear trajectory towards growth.
Bhavna, what's your prediction?
Yeah, I would add to what she just said. I think there are several factors that also make me believe that it's going to be a more positive year. We are not definitely heading towards a slowdown. I think we would actually end up with more IPOs, more exits, and I think a lot of things that are being done by the government, right? I think the fund of fund being one of them, but other than that, I think a lot of regulatory changes in terms of, I think the angel tax was removed. I think a lot of regulations from our regulator have been lax. I think they've been adding to a lot of people opening their own funds. So I think the number of AIFs, for example, that have increased in India in the last year, over 100 new funds are being registered. There's a lot of enthusiasm among the tier 2, tier 3 people as well to come and enter the startup ecosystem. So we see in terms of deal flow, for example, I think the deal flow, I think the total number of companies that sort of got funding last year were 1,500. I think the number that you have is for those companies. I think this year it would actually increase to even 2,000, more than 2,000. And early stage deals will actually get more boost. Because we run a community of investors who want to invest in startups, we're already seeing a lot of enthusiasm among, other things. Stock market, like Saloni said, I think secondary market, a pre-IPO, SME market, all of them have actually shot up. We see increase in consumption as well. So I think India this year definitely, and last year, has been driven by services and consumption, and we see the same trend happening this year as well.
Quick follow-up for you, because you invest across sectors. Which sectors are seeing most investor focus, attention?
At least among early stage, I can confidently say that AI, Gen AI, and now agentic AI has sort of caught up with founders and investors. I know that last 2-3 years, I think a lot of funding that sort of drove the ecosystem was based on what is happening in Silicon Valley. I think now we're sort of seeing this permeate in the Indian ecosystem. So yes, what is happening in Silicon Valley, but yes, how can these solutions also be adapted to the Indian market? So we definitely also see fintech, healthcare, also take a boost in funding. B2B SaaS will, I think, will sort of now evolve towards more productivity and efficiency focus with agentic AI solutions being implemented in the market. So definitely, I think some evergreen themes where we see money will go would be B2B SaaS, AI, strong AI focus or AI foundational models, because I think India has been sort of put on spot now to
Because of
buck up,
DeepSeek.
yeah,
Yeah.
buck up
Yeah.
and make your own models. Healthcare, finance, education, these are the themes that we see funding going to. Some emerging sectors like I think space tech will also get funding. Deep tech as well has been underfunded so far, but we see a lot of interest there as well. Biotech, life sciences, I think we have a couple of portfolio where we are putting money in companies in those sectors. So yeah, we definitely see these coming up.
Salone, from where you sit, what are some of the sectors that seem ripe for disruption in India?
I think when we map the market, there are a couple of very key trends that we see, right? India has 800 million smartphone users. An average Indian consumes about 31 gigabytes of data a month. You've got UPI, where UPI now accounts for 80% of digital transactions. UPI last year processed about 172 billion transactions worth 3 trillion. So when you put this all together, you start to understand, and when you go down the value chain of what sectors this will impact the most, for us, we identified media and entertainment as a big, big sector. And another very key point for this sector is, we don't discuss this enough, but 50% of India's population is under 25, right? So the way this generation consumes digital, anything digital, and predominantly digital, and I call them the swipe before type generation, right? This is a generation which is used to media being immersive, interactive, and deeply personalized. So for us, when we are mapping the market, if you were to, let's say, even look at media and entertainment today in India, it's about a $25 billion bucket. Half of it is linear, it's old media.
Yeah.
It's print, it's television, and I'm sorry, you're from the print side and
I'm
digital
digital,
side
full
and digital
yeah.
side, but you come from
Yeah, I come from
print.
background. Yeah.
But if you put aside television, you put aside box office, you put aside out of home, you put aside print, that's about $12 billion.
Yeah.
The other balance, 12 billion, is gaming, it's esports, it's animation, VFX, it's digital media. And that is growing, and that's the other half, but that's growing at like 20%, right?
Yeah.
That's expected to be 19 billion over the next 3 years.
Yeah.
So from an investor lens, that's the sector which I believe is very interesting.
Yeah.
And then there is this massive ecosystem around it of tools, tech infrastructure, of how AI gets leveraged, how VR gets leveraged, or even how immersive interactive mechanics can get leveraged in legacy industries like edtech or fintech or fashion. Because if your demographic profile is under 25 and they have just entered the workforce, you have to meet them where they're at in terms of how they're going to consume digital products.
Yeah.
And that's essentially a very key part of our thesis and where we see growth lie.
Obviously, one of the sectors you focus on is gaming, and we were talking about it backstage. It's incredible to hear how rapidly that sector is rising. In terms of what's happening with gaming globally, or even next door, like in China, how do you assess the potential for India? Or like anecdotally, would love to hear what are the kind of gaming platforms that are taking off in India.
Yeah, it surprises most people, but gaming is a $250 billion behemoth in the global media entertainment industry, right? It's bigger than movies, it's bigger than television, it's bigger than music, it's bigger than TV, it's bigger than sports media rights. And when you look at India, you cannot imagine it to not be exposed to the same trends that we see in the global markets. Gaming in India is twice as big as Bollywood, and it's equal to cricket revenues. And this is a 3-year-old industry, right? It's taking on entrenched religions like cricket and Bollywood in India. And for us, that is the very exciting inflection point, right? That's where we see the growth potential. It's a $3.5 billion market, but growing incredibly fast. And what the biggest unlock in gaming has been microtransactions, which are mobile first and mobile led, right? So again, it goes back to the 800 million smartphone users. You have 591 million gamers who are spending anywhere between $3.8 to $4 billion a year just on gaming alone. and which are all digital products, right? So, and you have a very, very young demographic who's recently joined the workforce. So if you were to trace that to say, how do you extrapolate it to the future, you can very clearly see a growth trajectory, right?
I want to talk a little bit about early stage investing, and curious to hear like how you identify and support high potential startups at the seed stage. You told me backstage that you guys are also opportunistic, right? Could you talk a little bit about how you mitigate the risks associated with a lot of the early stage investing?
Yeah, I mean, we consider ourselves super opportunistic, early stage, community focused, network, and a fund. I think one way we sort of leverage all of that. Like today, we have 20,000 investors across 60 countries, right? I have few investors in Doha as well who are very interested in the Indian ecosystem and they invest with us. I have investors in Iceland and Saudi Arabia, and these are individuals, right, who invest with us. It's very interesting what this network, global network, can do for an early stage founder who's always looking for mentorship, who's always looking for business opportunities, right? So one way we leverage it is that we fund them, we guide them the milestones they need to achieve for the next few rounds. Plus, we leverage our network of global VCs and domestic VCs to get them their up rounds and create business opportunities for them. I think that itself is a huge confidence boost to early stage investors. I think one thing that, I mean, I was in China for 6 years, right? So I think even the sector that she spoke about and how in general early stage investments work, it always astonishes me. Why isn't Indian founders building for outside of India, considering that I was in an ecosystem where Chinese were building for India, right? I mean, I was building for India from Beijing. So it's always exciting to me to understand what can be done or what bridges could be built to help early stage founders, go abroad and build something for India which is global. And yeah, I mean, early stage investing is all about backing the right founder. So, we have to look at the person who's leading this. Do they have good operator background? Do they have a good co-founding team that can execute well? Execution is everything. In 2020, 2021, we made a lot of bets that were pre-revenue, pre-product. Today, one thing that probably I would say has changed a lot in our thesis is that I want some traction, I want some revenue. I am not that easy to convert when you don't have anything to show. But yeah, we are super bullish about India in terms of the deal flow that we're getting, and yeah.
So, because you work a lot with individual sort of investors, can you talk a little bit about how the investor expectations are evolving? Is it evolving?
Oh yeah, I think it's evolving in many ways. So one thing, how the macroeconomics sort of affects, the investor mentality is that now investors are looking at quicker exits now that they've seen a boost in SME IPOs, now that they've seen a boost in secondary market, pre-IPO market. Whenever you see liquidity, a way of exit for the liquidity, I mean, there's always this idea that, okay, now I want to put money in this asset class because now I see a way for this money to get out as well, right? Earlier, I think there were a lot of concerns from investors that, yes, I'm going to put money at early stage. I know that I may not get this money back at all. But luckily, in the last 2 years, that we've seen a lot of secondary market come up. Like in India, I think last 1 year, we've seen 5 secondary funds set up. That's a big deal. It's a big deal because now people see that, okay, if I put money in startups as an asset class, I can actually get an exit. So business models that can actually generate cash faster, that is one thing that investors are looking at. So careful consideration of where the money is coming from and how fast it will come. And second consideration is the liquidation, right? They're putting money with the expectation of getting out 4 to 5 years, as opposed to earlier it was 7 to 8 years or maybe 10 years, right? So I think that again boosts the interest of investors to put money at early stage.
Salone, is that different from the institutional investors you work with?
90% of our capital is institutional. So there is a lot more, I'd say, patience there. And that's been a deliberate I guess, endeavor from our side also, to act as conduits for global investors to come and invest in the India market. And our investors are from Japan, from South Korea, from US, Europe, and some from the Middle East. I think more importantly, it's not as much LP motivation, and of course, there is always the exit consideration, and you essentially should be meeting your return profile. I'd say importantly to understand where market flows and ebbs, right? 2020, 21, there was a lot more heavy deployment. LPs were actually pushing you to deploy capital because 0% interest rates. You're looking for a return on money. You'd rather have that money work for you. You want to push to deploy it. There is a lot. Interest rates have risen. Other asset classes are providing better returns and faster returns. So hence the assessment from an LP perspective is, hey, why should I block my capital into 10-year illiquid funds with a uncertain return profile? Instead, rather, I invested in the public markets. Now, in India, the public markets, and my personal public market portfolio returned 120% realized return, right? That's not happening in 1 year in venture capital, right?
Yeah.
Now, so that is kind of the shift that's happened from an LP perspective. From now an investor perspective, when you have seed stage investors, it hasn't changed much. I think one fundamental shift that's happened in India is your seed rounds have become larger.
Yeah.
Majority of your seed rounds are now $1 million. That wasn't the case maybe about 3 years back or 4 years back, right? There have now been these bigger rounds which are happening of 3 to 5 million as well, which is very akin to what was happening in Silicon Valley. You do see that happening as well in the India market. Another big shift that has happened is growth stage funding has really dried up, right? You increasingly see investors saying, hey, I want the metrics of a Series C company, but I want it at a Series A valuation, right? So there, everybody's a bargain hunter right now in the market. And so when you hear even seed investors saying, hey, it's very difficult for me to get convinced about a business which is pre-revenue, now I need to see traction, the bar to raise money at the later stages is becoming higher and higher. Yeah. Now, if you're an investor who has a very large portfolio, mortality is becoming larger because the ability to raise capital at the later stages for many of your companies is going to dry up. So in that sense, there is going to be a shakeout that's going to happen in venture. But I think it's for the good because there was a lot of things that got funded in 2020, 21 which should not have ever been funded. And I think now we're kind of correcting back to the mean. Founder expectations are resetting in terms of valuation. Funding rounds are taking longer. It's not a bad thing, right? It's correction that was due to happen, which is now happening, which is healthy for an ecosystem. Yeah. And I think that is important to establish.
Well, I wish I could chat for much longer. As we said, this was 20 minutes and we're at time. So thank you so much both for your time. And thank you to the audience.
Thank you so
Thank
much.
you so much.